Today, I want to cover some of the signs that you will get declined for a mortgage. The reason I wanted to do this video is because often people are talking to us and we're like, yeah, you can't do it now, but you can plan for the future. And that's what I want to stress with you first of all, is that, look, if you have one of these signs, instead of just never calling a lender, give us a call. Let's talk about what's going on and let's put together a game plan. We do this for free, okay? I can't stress that enough, because one of the things that breaks my heart is we literally will have an application come over and maybe it won't qualify for one reason or another. We always call you, right? We're gonna call you, we're gonna ask questions, we're gonna make sure that what's coming over through the digital mortgage is accurate, right? And if it's not something we can do now, if it doesn't meet guidelines, we're gonna talk to you about what you can do so that you can buy a house in the future. And what kills me is what we hear a lot is, you're the only people that called me back. And we're like, what? They're like, I applied with 15 lenders. You're the only people that called me back. Wow. And it's like, that's the problem with the industry, right? So you guys, as home buyers, you have your hopes and your dreams, and then you're getting ghosted. That's effed up. It's effed up. I'm sorry. I don't know. Is that crass? I didn't really cuss, but I kind of did. It's not right. So I'm going to tell you what the big signs are, okay, so that you know, but then I'm going to encourage you, if you have one of these big signs, give us a call. Let's plan for the future, okay? We do that for free. You can get on the calendar. I've got Alyssa, Sandy, Linda, Christina, Amber. Everybody is there to help you get to the finish line, okay? So don't be afraid to plan. Okay, what are the big signs you're gonna get declined? Credit score, but it's not necessarily credit score, it's more credit history. So let's talk about that real quick. Different loan programs have different parameters for credit. So for instance, if you're trying to get a conventional loan, 620 is the cutoff. VA, we don't have a minimum credit score, but we do have credit history. And then FHA, we're at about 550, okay? But the number one thing I'm looking for as a lender, are you current on your bills now? Yeah, it doesn't matter what the score is. If I look at your credit report and you have a bunch of stuff that you're currently not paying, that's a deal killer. You have to get caught up on your bills before we can give you more money. It's really simple. And sometimes people are like, I didn't even know I was late on that. And I'm like, yeah, they're gonna ruin your credit for $1, because that's what we'll see. We'll see that someone paid off a credit card, but that credit card was still accruing interest between the time the bill came and the person paid off the card. They didn't pay it off in full. They got a bill for 26 cents. They thought it was a joke because they'd paid off in full. That is something we'll see. But also sometimes we'll see that people just haven't been paying their bills. So yes, you need to be current on your bills to qualify for a mortgage, okay? And look, the planning on that one is get current on your bills, okay? But yes, if you have a ton of current late bills, I'm going to decline your mortgage. Done, right? I'm not gonna sugarcoat it. Okay, what else? The other big reason for declines is debt to income. So let's say, for instance, and I'm gonna use big numbers just because the math is easier. If you make $10,000 a month, okay, and I look at the house you wanna buy plus all your minimum monthly payments on your credit report, and let's say that that's $8,000 a month, okay? New house plus all your debt is $8,000 a month. You make $10,000 a month. You're like, okay, well, Jen, I make 10 and it's only 8, so what's the problem? Your debt to income is 80%. There's no loan program that is going to allow an 80% debt to income. So debt to income is something that we definitely see declines over. What we'll generally do is we'll talk about, okay, can we go lower on the housing price? Or, sometimes it's just how your debt is structured. So for instance, I've had borrowers where they're putting down a good amount of money, but it's better to put down less and whack away some of that debt because the monthly payments are so high. So in a situation like that, if your debt to income is really high, we're going to be talking to you about, okay, what could we do? I always like to verify the debts as well, because you'd be surprised how often we get a credit report and it says that you have something that you don't. And that's what you guys need to know too. If you're being declined by another lender, did they actually stop and ask and say, hey, like, do you still owe $20,000 on this credit card? And the reason we ask is because there's so many times that I've asked that question in my career and someone goes, I paid that off a month ago. Credit reports do not immediately show stuff that's been paid off. And if you're like, I sold a car, tell the lender up front, because a lot of times those car loans stick around for like 3 or 4 months afterwards. And do you have to wait 3 or 4 months? No, if you sold the car, we're just gonna have to get a credit supplement. So the second big reason we see people declined is because of debt to income. However, we always want to have that conversation, because a lot of times the information we're seeing is inaccurate, or there's a way to restructure it. Okay. And look, if you're a veteran, we've actually had some fun with it where, I always think of Sahar in Houston. She's a real estate agent, Sahar Khatib. I love her. She's been on the channel. And we had a buyer and he was moving from New York. And the only way he could do it is we had to get like a lot of debt paid off. So I told Sahar he needs all closing costs, sorry, allergies, and I need to be able to pay off this debt, because VA is the only loan you can do that with. So she found him a great house. She negotiated with the seller. We were able to have the seller pay down his debt and his closing costs, so he was able to make the move from New York to Texas. So there's a lot of creative ways to think about this. But if, for instance, your debt to income is really high and I don't have any levers to move, right, it's gonna be a decline, right? And sometimes, you know, one of the levers is bringing down the price, but in many cases that doesn't even work. So debt to income is important. The key is going to be having the conversation with the loan officer about, okay, what is my debt to income? And, you know, is there anything we can do to help it? Okay. What else? So another big decline is tax returns not matching what you're telling us. You know, I think for self-employed buyers, it can be challenging in that, you know, and this doesn't apply to all self-employed buyers, but I've had a lot of self-employed buyers over the years where maybe they make $500,000 gross, but because of the expenses associated with the business, it nets down to $50,000. And they're like, but I make 500. And I'm like, actually, based on your taxes, you make $50,000. You know, in a situation like that, if you have money down, we can look at a bank statement program. That could be a great solution. But if, for instance, you're looking at FHA, VA, or conventional, we're going to be looking at those tax returns. So if you're looking for a lower down payment loan, like, you know, conventional, you're a first-time home buyer, 3% down, FHA or VA, and you're self-employed, and you know that there's a lot of write-offs, you do need to be cognizant that that can lead to a decline, okay? And in a situation like that, it's not like, you're declined forever. No, it's like, hey, look, here's what's going on. You know, if this is how your tax returns are, and if this is what you're trying to accomplish, you're going to need to save in order to go towards this other bank statement program, okay? So look, those are the 3 big reasons I see people get declined. Usually it's credit history or debt to income. Those are the 2 biggest reasons. And just because you're declined today does not mean you're going to be a decline in 6 months. We have had so many clients where initially they weren't ready, but we took the time to talk to them. We took the time to say, hey, like, do these few things. And look, does everybody come back after doing those things? No, they don't. You know, I've had people actually scream at me, no joke, and be like, you're just declining my loan because you don't want to give it to me. And I'm like, no, I can't do it. You haven't paid your bills in like 6 months. This isn't me personally declining you. This is a problem you need to fix. Fix this problem, do this, this, and this, and come back, right? The people who are screaming usually don't come back because they're not ready to be responsible for anything, right? It's either give it to me now or I don't want it and you're the enemy. Here's the thing, it's a house, guys. It's a house. So putting in the time, energy, and effort to fix what's not right so that you can get to the finish line, it's worth it. And I see that all the time. And that's what I love so much too, is I love, like, you know, I'll talk to someone and they'll be like, hey, Jen, because I'll be like, hey, it looks like you applied a year ago or 2 years ago, you know, what's changed? And they're like, hey, I applied a year ago. I wasn't ready, but I did what you guys said. And, you know, your team got me approved. And I'm like, I love that, right? Because here's the thing. I have a big banner now that says, like, on LinkedIn and Twitter, yes, you can buy a house. I really believe that. I believe that every single person has the ability and the opportunity to buy a house. They just need the steps. They just need the steps. It's that simple. Now, look, can we all buy $5 million mansions in Aspen? No, right? But, like, look, that's like a big income thing. But can we all potentially buy a house in the United States? Yes. I mean, look, guys, not everything's crazy expensive. There's so many amazing towns throughout America where there is still affordable housing. So look, work the steps. And remember, if you're getting declined for a loan, always ask questions and make sure you're working with a loan officer that's going to take the time to tell you how to get in the finish line in the future. Okay, so I hope this video was helpful. Questions, comments, if you want to plan, guys, we do this for free. Seriously, take advantage of the resources that I have put together for you. Sandy and Alyssa, the calendar, book a time on the calendar. Tell them what's going on. Let's put together a game plan. Now, I want to be really clear here because sometimes people will be like, well, I want to know what I qualify for now. If you want to know what you qualify for, you need to do an application because we're not going to give you nonsense numbers and be like, oh yeah, like, no. Planning calls are for, like, here's where I am, here's where I want to get to. What do you suggest I tweak? Does it sound like I'm ready or does it sound like I have work to do? That is what the planning calls are for. So hop on the calendar, call us, text us, 786-933-2077. If another lender declined you, I do think it's worth calling us and telling us what's going on because the other thing is sometimes people are declined when they should be approved. So thanks for watching and I look forward to talking to you.